Hello, everybody. Welcome to tonight's stream. We're going to talk real estate investing, and it's going to be really interesting because we're going to talk a little bit about fractional investing in real estate. So I got two guests with us this evening. So I don't know if you can hear me already, but let me know that you can, if you can hear me out in the chat, give me a thumbs up and let me know that you can hear me okay. And what we're going to talk to tonight is our guests are Nick Roman and Taylor Utt, and they're with Realbricks. And without further ado, I'm going to bring those guys online here. All right, I got Taylor and Nick. Nick and Taylor, welcome to tonight's program.
David, thanks for having us on, man. Super excited.
All right, I'm excited about this because I'm a little old school, so I've been an investor and I've done it the old-fashioned way. So I was intrigued by this, and I thought, you know what? Hey, come on board and kind of explain this to folks. And I think it's kind of a neat concept. Hey, and we can hear Clark can hear me, and Clark. All right, Clark. Thanks for joining tonight's show. Okay, and Clark can hear me. Okay, excellent. All right. Well, guys, let's get right down to business because we got a lot of things to cover tonight, and we got one more. We got MH08, and he said they're chatting back and forth. All right. Well, guys, tell me, can you explain what fractional real estate investing is in kind of simple terms?
Yeah, for sure. Nick, I can take this one. So, fractional real estate in really the simplest way is a new way for people to invest in real estate without needing massive down payments, and buying the house outright. So just as you would, pool together money with a bunch of other people, if you had 5 friends, let's say, and you wanted to go say, hey, that property looks awesome, we should invest in that. You all 5 took your money and said, okay, let's pull it together. Maybe it's, $50K, $50K, whatever you pull it together, and you go purchase the house outright. That's kind of like in a more traditional sense, like a crowdfunding kind of piece, but fractional real estate is taken even a step further. So basically what Realbricks allows you to do is find people all across the nation with any budget. So let's say as little as $100 all the way up to, $30,000, $40,000, $50,000. You can pool all your money together and then purchase portions or fractions of an investment property that's then going to pay you rental income and then let you be a legal owner in the house so you can earn appreciation over time. So think of it as a way that you can kind of join forces with a bunch of other like-minded people that on a platform that you can go purchase investment properties without needing any of those massive barriers that have kept a lot of people out for before. So it's a really cool, it's a pretty new concept. A lot of people have never heard of it before, and that's why we're so excited about the space, is because it's kind of a new take on home ownership and investment property ownership.
Right. Yeah. No. And how did Realbricks get started, and how did you guys come up with this?
Yeah. So our founder, Chris Girardi, he's kind of a visionary. He's started quite a few companies and very successful with them, but he's always kind of been into the alternative investing space. And I know he's big into crypto, kind of like even before crypto was massive, right? And he was kind of sitting there thinking, it's like, man, like real estate is one of the most tried and true stable assets of all time, but yet, like, how is there not something like this, in real estate? Like this industry is ripe for disruption.
Oh yeah.
Did a bunch of research, found it's like there's not really a lot of platforms or ways that the average everyday person can kind of crack into the real estate investing market. So he went through this crazy long journey, going through both, building out the tech platform, which was a huge lift, right? Like, we're fully regulated by the SEC. So in order to sell securities, just for securities, about what I mean is like stocks, essentially.
Right.
The government you have to go through really strict regulations and audits, and they have to pretty much abide by all of their rules, go through all kinds of crazy process. So really the build out, of Realbricks took 2.5, almost 3 years, both from the tech side of things to make everything feel like kind of like the stock market of real estate, in a really seamless, easy to use way. And then also the regulatory piece, because, that was one thing that, Chris really wanted to make sure was lock solid, was, making sure that we are up to par, and we couldn't go live without the SEC's regulatory amendments and making sure that we're up to par with everything we did. So was really a 3-year process to get everything crossed, the T's dotted, or the T's crossed, I's dotted, and then really just last August, I think, was the first time we went public or said, hey, now we're open for investment. Let's go through this. So really, Chris's vision was just, hey, why can't everyone invest in real estate? This is kind of crazy. And it's been a wild journey, but it's here. And, that's, I think, why I brought Nick and I on both, and the rest of the team, just to kind of help come spread the word and grow this thing. Cause there's a lot of people that are really interested in this kind of thing, because it's so new.
Well, and it's such a barrier. That down payment is such a barrier. And then here, the kind of the benefit too is you got the kind of an economy of scale to where you're in the investment, but you're also not having to, because sometimes you can learn about I've learned some investment lessons the hard way too. And sometimes when you're by yourself, that's even more at risk. So that I can see that as well. And then Nick, your role is head of investor relations. So you're kind of into that whole SEC thing and all that sort of thing. You're in the belly of the beast of that. Is that right?
Yeah. So really what I do is anytime someone signs up on our site, I'll reach out with a phone call. I'll text them. I'm not an SEC registered individual, so I'm not acting as a fiduciary. But that doesn't mean that I still can't help someone go through their goals, what they're looking to accomplish. Most people who I speak with, they've thought about real estate for a while, maybe even looked at offering on properties, and either the down payment is not ready to go, or they don't have the time or bandwidth to go through the whole process of writing up offers, getting a mortgage, especially with where interest rates are right now, making multiple offers, closing on a property, and then dealing with all the headaches of owning a home. So they find Realbricks, and it's like a breath of fresh air, because they can start with a much smaller amount. When you're comparing the amounts that you invest with us compared to buying a house outright, the numbers start to get a lot less scary. But you're still reaping the benefits, right? You're still getting cash flow from the rental income, as well as the ability to see your shares appreciate in value, which we'll get to a little bit later on. So, I'm not advising people. I'm not recommending that they put X amount of dollars in one property and X amount of dollars in another. I definitely go over what people's goals are and what they're looking to accomplish, and help them learn how to use Realbricks and what this can do for them.
Okay. And Nick's great too. I mean, he's chatted with probably thousands of investors at this point. So chances are, if you sign up for a Realbricks account, there's a good chance that if you want to talk to Nick, you're going to get
Is that right? Yeah.
An hour. And, Nick does a great job. So any questions you have, like he's so good at just kind of, like he said, walking through people, hey, this is my first time investing in real estate, or all the people that have, we've had people on our platform that have like 20 properties across the nation. And they're like, hey, I just want to expand into different markets. Great. This is awesome. So Nick helps that pathway for pretty much anyone that's, kind of unsure, kind of the on-ramp, getting on and used to our platform.
Well, and what's I think it's exciting is that you're in the Omaha market. How did you choose the Omaha market for investing? I'm intrigued by that. Yeah,
for sure. So our founder actually lives just up the road in kind of near Norfolk.
Okay. Yep.
And so, when we're going through the SEC regulation process, right? So we had the option to, looking at properties all over the nation, but one, Omaha is a fantastic investment market. It is a fantastic market to not only buy a home and live in it outright, but for investment as well. And it just so happened we're like, okay, the returns look really great here. Also, it's in the backyard, and when we're going through these SEC regulations and kind of making sure everything's together, like you need to physically own the homes and be able to like tour them and show them and look at a lot of these things. And so kind of worked out both ways, that like, hey, this is a great investment, but it also happens to be right in the founder's backyard. And so we launched with the Omaha market, and it's been fascinating how many people all across the nation are like, I've always wanted to get property in Omaha. Just Midwest, people are looking for good, affordable entry points, but with good price to rent ratios, and Omaha fit the bill perfectly. So it's kind of 2 birds, 1 stone with that.
Right. And there's a lot of, it's a healthy market. We don't get the high highs and the low lows and that sort of thing. And we're growing and things like that. We got some folks in the chat here today. We have, Relocate Omaha. Ben, exciting times to be a real estate investor. Things are going to be changing for the better soon. Real estate is going to be a lot easier to invest for the average income people. Yeah. And you guys do that. That's where you guys come in. What is who is someone, how does someone, what's your minimum investment? Is there a minimum amount?
Yeah. So when someone signs up, and they'll see this most likely on the ad they clicked, or they heard about us on another podcast or on Bigger Pockets or somewhere, we make it very clear that each individual share is $10.
Okay.
And the minimum investment is 10 shares. So just $100 is the minimum.
Gotcha.
And, as Taylor was mentioning, I talked to pretty much everyone who signs up with us, and it's really interesting to see the range of types of people that we work with, right? Because some people I talk to, they're telling me, hey, Nick, I need to wait for my next paycheck to put $100 in.
Yeah.
We absolutely love those types of users because they would have never been able to buy real estate before.
Right.
So those are going to be long-term users who are just continuing to come back and put in, $100 here and there as they're able to, or each time they get a paycheck. The maximum amount that any individual can invest is about a 9.5% ownership stake, and that's closer to about 3,700 shares.
Gotcha.
So about a $37,000 investment, closer to a slightly more traditional down payment, but actually not really, right? I mean, down payments right now are probably 80,000 plus in the Omaha market.
Right. It's fully passive.
Yeah. Right. So yeah, short answer is $100 is the minimum.
Wow. And then you guys manage it. You guys, all of that is done for you.
Yeah, it's about as set and forget as you can imagine with this, right? So I mean, like, really, when we talk about like passive real estate ownership, I mean, it's funny, like we're very closely partnered with Bigger Pockets, one of the largest real estate investment communities. And, it's so funny. I see all these, these ads and these other companies talking about, touting passive real estate investment, but it's usually just a strategy where you take someone else's like hard money loans and then you're doing you're doing the fake, it's like, oh, it's passive once you get it there. But like, we're about the closest thing that you can do to where you download an app, enter your info, and then you could be a legal owner of of investment property in less than 5 minutes. And then you don't have to touch anything until your dividends come. And then the biggest thing then is just depositing your rental income dividend. It really is that simple. So it truly is passive, which I think a lot of our users love. And we get a lot of feedback on.
Well, and I think a lot of people don't understand that real estate investing is far from passive. Even if you have a property manager, it's constantly on your mind and that sort of thing. So I think that's really what I got a series of questions, and usually what happens, I have these questions, and then as we go in the stream, it goes all array. But we have some more folks in the chat. We have, let's see, Real Cats of Colorado. That's a new person. Very cool. Okay, and then we have Dylan Petchke. I hope I say that correctly. How does Realbricks compare to ARC7?
Yeah,
Go ahead, Nick.
Yeah, I was going to say that's a great question. So, as Taylor mentioned earlier, there's not a ton of other platforms out there, but there are, of course, right? It's real estate. There's plenty of space for multiple operators. Fractional real estate is relatively new in the arena. With some other companies out there, there are a few key differences that you'll want to look at, right? How do they buy their homes? Are they financing them? Are they paying cash? Is it more like a fund or more like a REIT?
Okay,
So I believe with ARC7, I'm fairly familiar with them. You are choosing the property. I think they have a slightly different product with their debt offering as well. Like you can invest in debt or something.
Okay.
The other thing that you'll always want to make sure of when you're looking at companies is, are they registered with the SEC?
Right.
There have been some companies recently that have gotten in some hot water because they tried to either skirt those regulations, or they're doing like a tokenized product. So yeah, with ARC7, to my knowledge, they have a fairly decent track record. I think they do things a little bit differently. I think
I think I'm not exactly sure what their SEC status is in terms of approval and if they're regulated. That's always one thing we say to check. Just you can always check in the offering circular. Like, if a company doesn't have that there, that's usually a big red flag. But not sure if they do or not. They typically also, ARC7 I think has a little bit higher price per share. I think think they're about $20 a share and up to $100 a share. So, you know, I'm not sure if, you know, minimums are the same there, but, yeah, there's just different markets, you know,
Exactly. Different. Yep. Exactly. Yep. Okay.
Yeah. And then the other thing that you'll want to look into is some fractional companies out there require you to be an accredited investor. I don't think ARC7 does, but there are some other platforms. So keep that in mind as well. When you sign up with us, we do ask you that, but it doesn't really matter right now because we're open to everyone.
Okay.
And then, yeah, so
just so folks can understand the difference between an accredited and a non-accredited person, can you kind of go just a simple explanation of that?
Yeah, for sure. So there's certain requirements that the SEC has to be considered an accredited investor. It's a net worth of over $1 million, or your income has exceeded over 200K each year over the last 2 years as an individual, or 300K with a spouse.
Gotcha. Okay. So somebody who can take on that more risk and everything. Okay.
Yeah. So typically, you know, accredited investors, it's a really weird kind of strict, you know, piece in place where, you know, the deal offerings, like you can't just go on off the street and invest in, you know, like a, you know, multifamily or commercial real estate right off the bat.
Right.
You know, so I think the cool thing about our platform is as we grow, you know, we built that in so that, you know, we know there's a lot of higher net worth individuals out there that want access to those kinds of deals. Our platform's fully compliant and automated so that you can get in and get access to those deals. We don't have any publicly available right now. We're working on some things kind of in the midterm, within commercial real estate, multifamily, you know, opportunity zones, things like that. But
yeah,
in the interim, you know, our core focus is really, you know, making sure that retail investors, just everyday Americans, have access to real estate that they've never had before. So that's still our sole primary focus.
Kind of like where I used to work, believe it or not, I used to work way back in the day. I used to work for Ameritrade. And Ameritrade was when the internet first rolled out, it gave that individual investor an opportunity to, you know, it wasn't so cumbersome to buy a stock like it was in 1990.
Yeah.
When, you know, you buy just a couple shares with $70.
Yep.
And
yeah,
it was a lot more.
Robinhood came along.
Yeah. You know, and so yeah, it's completely different from, it's a whole nother world. So it's kind of, I hate to sound like I'm 85 years old, but all right, we got some more folks in the chat. Zaretha says hello, and let's see. Ben says a great guest to have on, and then let's see, Life's Adventure. All right, and then let's see what else. So how often, if you invest and you guys pay, how does the dividend work? So let's say I invest, just for shins and grins, let's just say $1,000. How often would a dividend get paid? Is that what you guys do? Is how it works? Is you have your investment and then you get paid a dividend, correct?
Yeah, Nick, you want to take that one?
Correct. Yeah. So it's quarterly, just on a regular annual basis. So, you know, we actually are wrapping up Q2 payouts right now.
Okay.
So dividends will be sent out either tomorrow or the next day. It shows up in your app. You can either transfer that to your bank or you can roll it back over into a property. And continue to invest. Yeah.
Okay.
Yeah,
so you can take those dividends and just can you put it back in? Are you limited to that same property, or can you use that one property as springboard into another property?
Correct. Yeah. So the way it's set up right now is, since the minimum investment is $100, your dividends would need to be $100 to reinvest them.
Oh, okay.
But we are working on a model where you can just do individual share reinvestments. So as soon as your dividends hit $10, you can reinvest. That should be coming in the next few months, which we're really excited about.
Yeah.
So that kind of opens up the idea of, you know, what do I need to invest in order to just immediately begin taking advantage of compound interest? So
sure,
those are good conversations to have as well.
Yeah, the dividend reinvestment program, we call it DRIP. That's coming soon. And I think the cool part, David, you touched on it, is like, you know, you invest in one property, you start getting your dividends paid. Those can be literally the springboard into the next property and the next one and the next one. And so, you know, as we grow with, you know, like properties across the nation, you can then start owning, you know, 0.01% across, you know, all 50 states. Like it was so cool. We had a guy come in. He gave us an awesome testimony. And he was like, "Man, I love what you guys are doing. It's so cool." He's like, "I've got a goal to own property in all 50 states. And he's like, this is the first platform that I feel like I can actually get there and do that. So I thought that was such a cool goal. And like, trying to do that manually, the old fashioned way. Could you imagine? Like,
yeah. I mean, just, I don't know. I mean, and I'm a big believer in investing in real estate, but I just, sometimes looking back, I don't know. A lot of times people don't know what they don't know. And I know, the SEC thing, I know that has to be you guys have to really be into technology, because in order to track all of this stuff, it's got to be, you got to really have a robust platform on that. And there's a lot of, there's, and I know when I worked at Ameritrade, that's such a heavily regulated industry in terms of everything you say, everything was so regulated and everything like that. It's just, that's, yeah. I mean, and there's a lot of folks doing things in the investment that are not above board. You know what I'm saying? And
that's why the SEC exists, right? Is to protect the investors. And, like, even though, for us, it was a 2.5 year process to get through regulation and do a lot of this stuff. Like, the heavy lift was on us to make sure that, the protection's there for the investors. And that's something we hang our hat on, is that, that's why we go through these quarterly audits with the SEC and make sure that
right. Yeah, that had to be, yeah. So how many folks do you have on staff?
So, team's growing. We've got about, 10 to 15 between contractors, full-time people. So we're smaller team, but we're a small and very mighty team that has done a lot with a little. And so, I think what's cool is that, when people hop on, and they get a text, from from Nick, they're like, oh, you're a real person. Oh, wow. Nick is actually on the phone, calling these people, helping them walk through and all sorts. I think, that's something I think we pride ourselves to do, is that,
right.
We're not so big, we're unreachable, that, you're just going to be left on red or a support ticket that never gets answered. Like, that's something that we really take pride in being able to connect with every single investor.
Gotcha. Now, if someone wants to invest through Realbricks, what's the actual step-by-step process?
Yeah. So once you sign up, you're going to enter some information just as if you were to open any sort of brokerage account. So you put your name, your address, your social, everything's very secure.
Mm-hmm.
You upload a picture of your photo ID.
Okay.
And then you link your bank account through a software called Plaid.
Okay.
And what that allows you to do is to sign into your bank and then choose either checking or savings. Also very secure. And then you visit the marketplace. Right now we have the homes in Omaha available. Quick note, going back on us talking about Omaha, we are expanding, right? We're not just going to be just staying in Omaha.
Right.
In the next few months, we'll be adding some new inventory. So that's exciting. Once you click into a property, and usually I'll do a screen share with people, right? You click into it, you select the amount of shares you want to invest.
Okay.
Right? You click place order, you agree to the terms.
Yeah.
And then you click invest. So
wow.
From point A to being an owner, I mean, if someone sits down in front of their computer, and we also have an app,
right,
it would take about 5 minutes.
Is that right? Wow. That's amazing.
So it's really quick. Like Taylor mentioned, I'm usually on the phone with people if they're, uneasy and they just found us, and it's 2025, right? There's a lot of scams out there. It's easy to fall prey if you're putting your social in and your bank account. Like, I totally get that when people tell me, hey, I'm a little bit nervous to do this. It's like, I totally get that, right? That's partially why I was brought on, was to connect on the phone with people and talk them through it, make sure they know that we're a real company and legit.
Right.
So it's all very easy on the computer or on the app, both on the App Store if you have an iPhone, and Android if you have or Google Play Store if you have an Android.
Yeah. And no, that's nice to deal with a real person. So many times people are not. Yeah. No, I completely get that. Now, what kind of returns can obviously returns are going to vary, but what is there a kind of a target that you're shooting for, or kind of something that somebody should not expect? But talk a little bit about that if you don't mind, guys.
Yeah, for sure. So you'll notice if you visit the platform, we have an estimated annualized return of 6.5%. I'm really glad that we have that number up there, because that's actually a very conservative estimate, right? We're aiming for much closer to an 8 to 9%. So the last few quarters we've been at a 8 to 9% annualized return.
Wow.
What that means is that each quarter it's going to be between about 2 to 2.5% return.
Yeah.
For these next set of dividends, we're projecting an 8%, so it should be right around a 2% quarterly return. We'd again much rather under promise and over deliver.
Right.
And then, as rents increase in the future, obviously there's things like inflationary factors and things like that. But of course, we want to continue to increase those returns.
Right.
Yeah, you're looking right now at the site. The Dalmore just had a lease extended through 2029. That's the last one on the list there. There's a 3% escalation in the rent for the next 4 years on that one. People have been pleasantly surprised with the returns they're receiving so far.
Yeah, I think something too, like, we purposely kind of go lower on this because, you'll see a lot of fractional real estate platforms out there, or, other platforms claiming real estate. They'll say 8, 12%, 15%, 20%. And then all of a sudden people get in there like, hold on, this was 3%, whatever. Like, where did my money go? Where's all this going? Like, we'd way rather give people, because, like, again, real estate, if you're looking into this to get, like day trading or, like have these crazy things, like, this is not what real estate is about. It's a mid to long-term wealth building tool. And right, this is realistic, right? We're in the Omaha market. I mean, David, you know better than anyone. This is about on par with what you can see. And like, I think the real benefit is, you're getting paid rental income and you don't have to touch the property or go see it to deal with any of the maintenance, the tenants, any of that kind of stuff. So, Nick, I'm glad you pointed that out because, there's a lot of companies out there. Just beware when I'm not saying that anyone's, falsely advertising wrong, interest rates or, like returns that they're going to be getting. But, I usually red flag goes up if I see, 15, 20%, investments at like $10, things like that. So we purposely try to keep it, lower and have customers pleasantly surprised rather than the other way around.
Well, and what I like to see too, just, from my, from my vantage point, looking back, when I started, I had to start, because I started when I was really, really young. I had to invest in a really, really old property. We're talking, it was in the lead Superfund area. We're talking lead-based paint. The thing was built in 1890. Okay. And granted, it was only $10,000, but I was 21 and I couldn't even dream of buying. Looking back, if I had my choice, if they had something like this back then, I would have been much better off, in my opinion. Now, I learned a great deal off of that property. Okay. But some lessons you learn are kind of hard lessons to learn that you would rather not learn. Okay. But it took me a while before I could buy a 3-bedroom house. Let's put it that way. You know what I mean? And then buying something in 1990 and is far different than it is today. And, I couldn't even touch a property like this back then, you know what I'm saying? And so and nowadays, with the regulations with lead, if you're an investor, you got to follow the RRP regulations. What's nice to see a new property, these are all newer properties, is you're not dealing with any of that.
Yeah.
And so I don't think people understand or appreciate. I truly do, because I'm like, wow, I'd really, that's, I'd much rather deal with a newer property than something, but.
Yeah, and a lot of the newer properties have warranties on them. I mean, I think it was the Blanton, Stag, and Cedar Ridge, I believe, were new builds when we bought them, right? So I'm not sure exactly. I will have to talk with Chris and see what. But I mean, like a lot of these new builds, right? Like they were just built, so you don't have to worry about is the furnace going to blow out? Oh, is the plumbing going? What things are just waiting to crack and break? Like that's another reason why we kind of target newer builds, is they're a lot easier to manage and less headache for investors.
Exactly. And it's like, yeah. And what I thought of? It's like, well, hey, I'm really, if I was a tenant, I would invest in my own property.
Yeah. I mean, hey, way to home ownership, you're invested in the real estate, right? Like in the portion of your income. Like it's awesome.
It's like you get a little yeah, I was like, well, what's stopping the tenant themselves from actually investing it? It's like a way of, somebody else's. You'd have no, I think the properties look solid. I mean, just looking at things here, it's kudos to you for that, because it's like I said, I learned the hard way, but you learn what you learn. You know what I'm saying? Speaking of lessons learned, what's something that you guys learned along the way, in the course of doing this? Like, what's one of the big lessons that you've learned along the way with doing this?
Yeah, I think I've got two, because I was thinking about this beforehand. The first one I've kind of touched on it, but like, really spending the time. I think while we were going through the regulation and the tech build out, there were times when we were like, "What are we doing this for? Like, this is so much work that this is to get both apps built, a web platform. We're basically recreating a stock market of real estate." And there was so many times, just tech development issues, slow, right? Like, a lot of these things just take time, and then on top of that, waiting for our regulation A from the Securities Exchange Commission, going through the audits. Like, there was times when I was just like, man, how are we ever going to make it through this? And then I think, a lesson learned was, once we started seeing investors show up just organically, and, getting some of our first reviews and seeing like how happy people were that this existed. Like, I mean, I wouldn't really say it was much of a lesson, more of like just a lesson in perseverance of like, okay, believing in, Chris's vision of like, we will do this no matter what, and no matter what it takes, and, having it take a while, I think was really cool. And it kind of instilled a really great, determination mindset in all of us, right? Like from the start. And I think, another lesson too, when I started, even before Nick came on as head of investor relations, like a lot of things we were doing, especially just to market this, because, a lot of people had no idea this existed. It was traditional marketing tactics, right? You run some ads, you get on podcasts, blog posts, whole 9 yards, trying to get it out there. And I think when we started realizing that, like, when Nick came on and we started having a real person talk to these investors, that was a huge lesson for us in realizing that, like, trust is everything when you're investing. And then just the fact that, Nick can show up and talk with him on the phone, and I can talk with him on the phone, and the just the trust and the appreciation that people had to like actually be like, wow, I can't believe I'm actually talking to someone real. That was a huge lesson in terms of like us being like, okay, maybe we shouldn't just do this as a closed off, like nobody can get a hold of us, like we'll just go performance marketing to get the whole word out. It's like, okay, this is still a human experience. Like we should treat it like one. And I think that was a good lesson for me, obviously as CMO, but also just bringing Nick on and like hearing back from our investors. And if you go look at our reviews on Google, all kinds of reviews, a lot of them talk about Nick specifically, saying so amazing working with Nick, because he made me feel comfortable finally investing in real estate. I was kind of and I think that was a huge lesson for me and just us as a team, and realizing that, like, hey, let's not take the human element out of this, because I think everyone wants to go digital these days. Everyone wants to just have like AI chat bot, chat with whatever, or passing it off in tickets. And I think us bringing more of a human approach to this has been a great lesson, and something that I think our investors have really appreciated, and that we're going to keep doing and committing to. So I'd say those are probably the two biggest lessons that we have.
Awesome. Clark has a question. What type of properties are currently listed, e.g. single family rentals, vacation, multifamily? Might have missed you all talking about it.
Yeah, so right now it's all single family homes. And, again, this is something that might be in the future that we look into multifamily, and then commercial and retail, right? We're continuing to grow month over month, adding new partnerships and new ways to get more inventory up on the site. I've had people started asking me, hey, I've got a property I've been trying to sell. Can I list it on Realbricks and fractionalize it, right? Like, there's a lot of different ways to fractionalize homes. So yeah, short answer right now, single family only, which I'm very bullish on. I've been in single families for a while now. Very straightforward type of investment, which I love. So yeah.
Yeah, and as far as like new markets coming, we've got 3 new markets that'll be coming probably in August. We can't disclose exactly where yet, but the cool thing is a lot of these we're continuing the trend of new builds. So these will be new construction, just because we found like that the great returns are easy to manage, and so again, keeping the vein in the single family rentals, but more spreading a wider net across the nation, which we're really excited about. Probably coming, I would say August. Or early to mid-August with live. So yeah, we're excited.
Well, because I mean, real estate is all local, and when you're an investor, and I've had investors contact me from out of state, and it's it's a whole nother animal, but you guys have a model and you follow that model. And so, yeah, that's and then for an individual investor, especially if they're a small investor, if you have a property in one location and, there's a major event that goes on, well, then you're exposed in a major way in that one market. And then likewise, if a plant closes down or something happens locally where, the market shifts or something, you're spreading that risk, yeah, I think that's a cool thing. Okay. And good question, Clark. And then looks like
great question.
Carter, all single family. Carter Smith must be on friend of your guys or an investor. So somehow we got the word out there. Okay. And then let's see, Life's Adventure and From Chaos to Awesome Way to Invest. Cool company. So I don't know if that's awesome. All right. And then let's see here. If someone invests today, what should they expect in the next 30, 60, 90 days? I have that down as a question. You kind of answered it already, but if you want to touch on that maybe a little bit or.
Yeah. So yeah, we kind of touched on it, right? Like if you invest, $1,000, let's just say you didn't come back and put anything else in, just take that, multiply it by 0.08 to kind of get an expected return in dividends, which would be $80. So $20 on the quarter.
Okay.
This is all something that you're going to be building long term. So a lot of people, sometimes when I talk with them, they talk about investing 100, and I tell them, yeah, your dividend's going to be $2, right?
Yep.
It's like sometimes, there's a very thin rope there that I have to hold on to, because why would I invest in something if I'm getting $2 back? Well, it's all a matter of scale, right? If let's say you bought the entire house in the form of shares, right around $400K, that's $32,000 a year in passive income, which is $8,000 a quarter, which is like you do that twice and you don't need a job, right? Like you're living off your rental income. So it's all a matter of getting started, taking that first step, whether it's $100, $500, $10,000, $20,000, right? It's just whatever you're comfortable with, and then just continuing to be consistent about adding more in. So yeah, every 3 months, it's just like clockwork. You're going to get a dividend in your account.
Yeah. And then I think, once, let's say you came in and invested in next scenario, $1,000 today. The cool part is, you're going to have direct communication with Nick and our team, right, going forward on, if you need it, it's always there. But something that's really cool that we built, a way for, especially, people looking to spread the word and help their friends or their family members get invested in real estate. We've got a killer referral program. So once it's only eligible for investors. So once you invested, even if it's whether it's $1,000, $10,000, or just $100, once you've invested, you get access to our exclusive referral program. So how it works, basically, you can go generate your own code. Mine is realbricks.com/Taylor. You can put your name, put anything catchy in it, and then what's really cool, and we see a lot of people do this, is they'll invest that night and be like, oh my gosh, I can earn $50 in free shares for every member that you invest, or that and then it's dual sided. So you get $50 in shares when you refer someone, and then they get $50 in shares as well. So it's kind of like a win-win. So we see a lot of people, like their spouses or husband will sign up for Realbricks, invest that night, and they're like, I got to get my wife in on this. And so we'll see name, last name come in that night. And then they're like, we got to get our son in on this. Right. And so it's a great conversation starter too. Like if you're at work, like, hey, guess what? I own, 1% of a home in Omaha. Like, whoa, what are you talking about? Oh yeah.
Right.
Start getting the conversation going. Like, yeah, use my referral link. You get $50 in free shares. And so it's a cool way for people to continue to build their portfolio for free over time. Right. And like Dick said, sometimes just getting started, $50, if you think about how many people or friends, that you have that would probably be interested in something like this, like that can really add up over time if you start spreading the word and getting this out there. So, that's something that you immediately get access to once you become an investor. So, between that program and then, communication on, updates on new properties coming available, different strategies, other ways that you can do it. You can hear from us as much or as little as you like, to be honest, after you invest. If you want to just set and forget and not talk to them when you can, but Nick, myself, the rest of the team, we're always here. So people want to look at, hey, there's a guy that had a CD mature and like, oh, hey, where should I put property should I put these in, right? Like Nick, the team is always available to.
Yeah, I mean, I think that's a really. I mean, I think it's like I said, if anybody has done it the old-fashioned way, it's intrigued completely different from foreign from what I was like. Let's see. Let's see. Now, okay, let's talk about what happens if a property loses value or there's a downturn. What obviously that's going to affect your dividend amount, correct? And
yes and no, right? I mean, if you're looking at just traditional real estate investing, I mean, you know this better than I do, David. You've been in the space longer than I have. If if your property value decreases, but you still have a renter in place, yeah, you probably don't want to panic and sell because then you're going to lose money.
Right.
But generally speaking, if you hold on to the home, ride the wave, and it's going to most likely rebound as real estate most usually does.
Yeah.
And you should be just fine. I kind of look at the risks more as, and this is what every investor always deals with, is vacancy, things breaking, right? If we're going to get into risks of owning real estate.
Right.
And again, it's a lot more spread out, right? You're not the only one on title, so you're not dealing with shelling out $4,000 for a new dishwasher, right? So worst case scenario there is the dividend might be a little bit lower that quarter.
Now,
right?
What about if would there ever be a cash call where if let's say something, because I know in my real-based investment world there was a cash call where it's like, hey, I got to go put in a new furnace, okay, because I had an old house built in 1890, okay, so
right, yeah.
So and my initial investment was $2,000, but I'm telling you what, I was exposed for a lot more. What is it in a case like that? Is there ever a case where there would be a cash call?
Yeah, so not really. Like we reserve, funds kind of for situations like that, because again, we're not in the market of passing that on to the investor. So like the risk, obviously, like dividend could drop to zero if it's completely vacant, it's not generating any cash. But like we reserve funds, for that specific scenario. So no need for cash calls in that. You're safe.
Right. Okay. Good. Okay. Awesome. Yep. Awesome. And then now, what happens? Can they sell their shares later? How? I mean, anybody doing any kind of real estate investing, and if you're buying a house, I'm telling folks, you got to have a long-term outlook, at least 5 years at this thing. And if you're buying a home, if you're not going to live in the home for 5 years, if you're buying and not even going to live in it for 5 years, then, in my opinion, you're better off renting. Okay. What kind of an outlook, or what happens if somebody, but things happen, life happens, things like that. What happens if somebody wants to sell their shares? Talk a little bit about that. How does that work?
Yeah. So part of what Taylor talked about was those first 3 years, right? Because we officially launched in 2021, but weren't available for people to invest in us until July of last year.
Okay.
Part of that time was spent building our secondary market.
Okay.
And what that means is that once a property is fully funded on our platform, it will move to our secondary market, where you will have the ability to sell your shares. I think Taylor actually touched on this a little bit earlier, right? Like when you're buying shares, or that may have been right before we jumped on here.
Yep.
But the idea is that it's going to be more like the stock market, right? And you buy your shares today at $10 a share. You visit the secondary marketplace. You see they're trading at $11 or $12. Hey, okay. do I want to cash out and sell, or do I want to continue to hold on to them and just continue to generate income, right? So we're really excited for that to happen. This is part of the brand new aspect of investing fractionally, is it's not really a thing right now, right? This is another thing that we want to be on the forefront on, is having a secondary market where it's basically instantaneous, that you're putting up your shares for sale and getting a buyer. Most likely won't be that right when a property moves to the secondary market. But as we continue to grow, get more brand recognition, people catching on to Omaha and the other markets we're entering, they come on, they say, hey, it looks like that's a good value, $12 a share, I'm going to go and buy those, right? So yeah, the secondary market is ready to go. And, one of the homes, that Dalmore that we were looking at earlier with the extended lease, that one most likely will sell out first and will be the first one to go onto our secondary market, where you'll be able to sell your shares.
Gotcha. Yep. Okay. Let's see. Omaha seems like a more stable market for appreciation and retention of value than Denver. Okay. Yeah, I don't know anything about the Denver market, but even during the great financial crisis, we didn't have, it took a long time. We had a boatload of inventory, but prices didn't crash. You know what I'm saying? That we didn't have, it took a long time for a home to sell, and there wasn't the appreciation every year, but our market didn't, we don't get the high highs and the low lows and that sort of thing.
Yeah. And I lived, I can't speak to the Denver market, but just from a personal resident, I lived there for 5 years and saw the transformation of that city from, 2008 to 2015 when it exploded. I remember living at the time, I was like, oh, maybe I'll be able to afford a house. And then, and then Denver happened and everyone moved, and then the prices shot through the roof, and then COVID happened and then the prices shot through the roof again.
I know.
It's, Denver's it's a great market, great place to live, but yeah, right. I can't really speak to the appreciation potential. It's, and I think the heyday there was definitely earlier on for sure.
Well, and I had someone, I thought I got kind of a kick out of this because, when I look at a home and I see $300,000 and I know that's kind of like more the entry level market for Omaha, and sometimes I have a hard time with that. And then I was talking to somebody who came from Denver, and they're like, I can see Omaha as where Denver was 10 years ago, where, look at, looking back, if I could have done it over, I should have bought more real estate, because,
hindsight is 2020.
Oh yeah. But here's the thing though, and this is where I think this is kind of an intriguing concept, because if you want to get into the game, boy, I guess what? You're going to have to pony up and have a whole bunch of money saved, where this allows a little investor, somebody just starting out, and if they're building that habit, I think that's a great opportunity for folks. I mean, from the surf, I'm not endorsing you guys or anything like that. I'm just, I thought, hey, let's educate folks on it and see what, obviously everybody has to do their own research and due diligence and everything like that. And obviously you want to have funds to invest, let's start by paying off your credit card. That would earn you 18% right there, but, sure. but I mean, I think you got to put your money to work for you. I mean, if you start young and if you start small, it adds up over time, and people don't understand that power of compounding. And if you get into that game, and it's real estate investing can get kind of addicting too, and much, people get house fever and things like that. It'd be much easier to pick out a house that you already said, hey, in 5 minutes, I'm going to own the darn a small chunk of it. I think that's kind of fun, where it's
well, and Nick, I mean, David, you touched on something. I mean, talking about, getting young people into this, I mean, man, if I could, 2020, sorry.
Nope, that's okay.
Let me mute that. Sorry. We're talking about, younger people getting in. Man, if I was in my 20s and started investing in real estate, like if there's something like this existed then, my goodness, that's so cool. But I mean, Nick, I know you've talked with so many people, college students, right? I mean, like literally that now have the ability, because I mean, most of Gen Z and even millennials think that they'll never be able to own a house. And, this is kind of an alternate way to think about, a non-traditional alternative approach to home ownership, which, I think is really cool. And, Nick, I know you've probably talked with dozens of college students, people, just freshly 18. They're like, yes, I'm 18 now, I can invest. It's cool to see. And I think that's where we're seeing the market go, is, it's a new wave of real estate investors, and next generation of real estate investors are entering the market now much younger and can enter it much younger.
Right. This one, true. Wow. Let's take more homes off the market and turn them into rentals as if housing wasn't expensive enough. Well, I mean, here's the other thing too. You also, if there's not investors out there providing, places to live, well, how much is rent going to be then? You got to have folks out there. You got to have, if there's folks out there not providing rental property for folks to live in, if there's that, then rent's going to get super expensive too. So, I mean, I can understand where he's coming, or that person's coming from, but at the same time, you know, and it's getting more I mean, the real estate investing, I think it was much easier 30 years ago than it is today. I think it, you know, except for something, a platform like this. I don't, you know, if you're going to buy 20% down and try to get approved for a loan and then have money set aside for reserve, that's going to take a long time to save up for that, you know, and this gives people a chance to, like you say, an alternative way to invest. I think that's a good, you know, I'm
yeah, I mean, that's what the whole principle was founded on, right? Chris's vision was just like, let's give power back to the average everyday person that, you know, can't afford to buy a home, but can actually appreciate, you know, like participating in an asset that a lot of the ultra rich get to participate in. You know, like we're not the BlackRocks of the world snatching up, you know, hundreds.
Right. You got a couple of homes in Omaha. You know,
but I totally hear the feedback. I get it. It's real. You know, it's just our mission is, you know, trying to give people new avenues to participate in an asset class that has mostly been reserved for the rich, that now, you know, renters can participate in, right? First time home buyers, younger generation. So, you know, I get that. But
I get it. And then Clark has a good question here. How do you guys select and underwrite properties, due diligence process? Excellent question.
Yeah, for sure. So, you know, I think, you know, when we're looking at these properties, I mean, again, when we kind of select the Omaha market, you know, we're kind of looking at places with stable economy, right? Unemployment rates we're taking into account, you know, what the, you know, the price to rent ratios are, and then kind of the occupancy rates around the neighborhoods of what we're looking at. You know, and so there's a bunch of process to this, but, you know, Nick, you could probably speak a little bit more to some of this, but, you know, again, the first market that we launched in Omaha was because, you know, we know, and we know Omaha like the back of our hand, and we, you know, see that that's a massively growing market. And, you know, again, it was the first properties that were getting us through regulation. So, you know, that's kind of the high level, but Nick, I don't know if you have anything else to add there.
Yeah, for sure. I mean, it's pretty simple buy box up front, right? I mean, we're targeting new construction homes right now. There is one that was built in 2015 on the site. So that's a big part of our business model right now, is we're going after homes that aren't going to require, knock on wood, major repairs in the next several years, which is going to require less of a reserve fund for repairs. You know, as Taylor mentioned, we look at price to rent ratios. Obviously, you know, whenever we can, we're going to try to increase rents. Not a pressure point for the tenant, right? We want to make sure they're happy. It's better to have a tenant stay long term than to just continue to increase rents. That's not what we're trying to do.
Oh, amen. Yeah.
And, you know, it's, as far as moving forward, you know, again, this is potentially future state where we have different types of assets on the site, right? If we have a more distressed property that we get in and fix up, and we're able to offer a higher return, maybe it's a bit older. New construction will always be part of our wheelhouse. So, you know, it's funny because when you're looking at the homes on the site, obviously not a ton of options right now, but it's not something where people have to have a very specific buy box, because new construction homes, good price rent ratio. Sure, there are homes that you go out there and buy that are a higher price rent ratio, but most likely they're going to be built a lot longer ago.
Yeah.
That brings on their own risks and types of tenants you get, the neighborhoods, the schools. So, you know, all that information is actually up on the site, as well as far as like how the school district is. And I mean, David, you know, this best here is Omaha's, from what I've learned, a pretty safe place to live.
Yeah.
You know, compared to the national. So, one thing I always say about Omaha when I get on the phone with someone is, I didn't really know much about it at all before I started. I live in California, but I've been extremely pleased with what I've learned about the market. So I'm very bullish on Omaha.
I am
too.
That
kind of, so yeah, and we've got an underwriting you know, team, and you know, we're a small team, but we look at every deal and opportunity, and you know, we're partnering with home builders for this next set of homes. So feel very strongly with that partnership. Yeah.
Awesome. Real Cats of Colorado says, it seems better to put it in the hands of regular investors instead of BlackRock and billionaires. Yeah,
we agree.
Yeah.
Yeah.
Okay. And then Dylan says here, Realbricks, is Realbricks backed by a VC firm?
Nope. We're not. We're all privately funded. Again, Chris, we've done some seed rounds for raises, but honestly, most of it has been from the network that Chris and everyone's kind of built over the years and made some really great connections. So we're lucky enough to have our own private investors that keep the ship going, which is great.
Yeah. And MH08 says mom and pop landlords are being forced out by regulations. I agree. Better local investors than some Wall Street firm. Amen. Yes.
Amen.
Yeah. I mean, because, and here's the other thing too. Competition makes people better. And when there's more investors out there, guess what? That lowers that's more supply. And that's going to make homes more affordable. And there's affordability problem all over the place. Yes. But I agree with that. Absolutely. And then, Eagle Eye Killer says Realbricks is awesome. Great app too. All right. Awesome. Okay. We got some new folks to the stream. So that's pretty cool. Yeah. Awesome. And then, let's see, Clark is a friend of mine. He has a channel in Atlanta.
Very cool.
So he might be somebody to reach out to and might want to be on he has a great program every Sunday night. It's cool that you guys are doing this because everyone doesn't have $1 million to invest and buy homes the way big corporations do. Yeah. And it's kind of, this levels out the playing field, and
yeah.
And that's pretty cool. That's really cool.
Clark, I appreciate the comments, man. You've been awesome. Great questions too. And again too, if you want another education session for your channel, we're open to it, man. We love coming on and just talking about it because we think this is really cool. I mean, like there's not a lot of people I think that have jobs where they like genuinely show up to work and are stoked every day because feel like we're changing something and building something. And I think you can probably see it in our voice. We just get stoked talking about this because I think it's it's such a cool new model and
right.
We're just trying to help spread the word. So
no, I think I get stoked going to work because I love I love selling real estate and then I love Omaha and then I like this YouTube thing and I noticed there in the background look at that silver play button. Yeah.
I know a little bit about YouTube.
Speaking of silver play buttons, this is an educational stream, but I will plug my own channel to go ahead and hit that comment. No, I think this has been really fun, guys. And anything else, or what advice would you give someone who has never invested in real estate before?
Oh, that's good. Nick, you want to go and then I can go. I think we'll probably have two good pieces of advice, maybe a little bit separate.
Yeah, for sure. I mean, for me, it's pretty simple, right? It's almost like when I get on the phone with someone, most often they've kind of already sold themselves, right? Because I'm on the phone with them, they're thinking about real estate. Why are you thinking about real estate? Well, I want to pad my income or I want to save up for retirement, college funds. I want to have a more comfortable retirement where I've built a little nest egg.
Yeah.
No matter what age you are, right? And we were talking earlier about the 18-year-olds who invest with us. It's like, man, if I could have invested starting when I was 18, like we wouldn't be talking right now because I'd be on a beach somewhere. And right. So it's such a powerful tool. And, if this had been around 10, 15 years ago and you would have gotten started at that point, you'd be really happy with yourself right now. So sometimes it's kind of hard to put yourself in that mindset of, hey, this is a long-term investment. It's not going to make me rich overnight, but man, take that first step. Dividends are going to be small to start based on how much you put in, but this is, again, something that you're going to grow for the long term.
Right.
And we plan on sticking with you through it all. So yeah, I mean, it's been really awesome talking with people from all walks of life and just taking that first step with us.
Excellent.
Yeah, for sure. And I'd echo that. I think, I definitely, even before I got into real estate investing, I was definitely in the stock market and loved playing around with it. And, definitely got burned by it a couple of times. I know there's a lot of young people out there too, that, whether it's with the meme coins or meme stocks, figuring out, just dipping their toes in the water, trying to figure out options contracts, things like this. And like, again, I think, for someone that's looking to get into investing, like real estate is such a cool appreciating asset that is just there's no other asset like it out there where you own something physical and tangible and real. Like a stock can go to zero. A house is not going to go to zero as there's real value to it.
You got, it takes $100,000 just to develop the land it's sitting on. So there's the lot is worth $100,000, right?
100%.
So I think the starting young is so important. And I was so fortunate in the fact that when I was young, my dad was he had me real late in life. So I hung around a 60-year-old guy as a 12-year-old. And that was a valuable lesson as opposed to, but I'm so grateful that he did, because he kind of just pounded it into my head.
Yeah.
And so I'm very grateful for that, because I think I just think it's like MOH says, it's a real asset. Yeah, absolutely. Yeah. And then let's see, FOCO web design says 100%. All right. Well, guys, we're at an hour. I want to honor your time, and I just appreciate you taking the time to be on the program. I learned a lot. I think it's a pretty neat thing. And anything else that you want to share, that you can think of that people need to know?
Well, I'll just take this opportunity to say thank you, David. Really appreciate you having us on. It's been awesome talking with you, and looking forward to staying in touch. And
awesome.
Yeah, I think you've got a great channel. So yeah, thank you so much for having us on.
It's going to get even better, hopefully. Hopefully one of these days I'm going to have one of those silver play buttons. That's the goal, but I think I think when I do the calculation, I'm going to be like 248. So it's like, but it's you got to start with one person at a time. Okay. Yep. Taylor, anything else that you can think of that you want to share with folks before?
No, I think David, really appreciate you having us on. And I think, if you, kind of found this to be interesting, check out Realbricks. Just go to our website. It's realbricks.com. And then, if you know anyone else too, that maybe it's young, you got a niece, a nephew, someone like that, just let them know about this, because I think you'll be surprised how many people really find this as a interesting way to break into an asset class, because a lot of people aren't investors, but it's a cool way to break into this. So I can't tell you how many people I've talked to this and, man, this is a great conversation starter, like cocktail party trivia, like, again, hey, we're just getting started, we're trying to grow this, we could use the help that we can get, right? Just spread this around to anyone that you think is interested. And hey, if you're interested, chat with us, Nick, myself, I guarantee if you sign up and you want to chat with us, we'll be the first ones on the phone with you. So
awesome.
Just appreciate you having us on, David.
You betcha, guys. Well, I tell you what, I appreciate having you on tonight. And like I said, if people want to check you out, they got to do their own due diligence and do their research and that sort of thing. We're not in, this is just kind of an educational thing. This whole fractional investing thing was new to me, but I'm like, well, you know what? I want to learn more about it. Not that you guys were gracious enough to come on the program. So I appreciate you being on my show tonight, and hopefully people got some value out of it, which I think they have. And if it gives somebody an opportunity, then that's even better. So, anyway, I appreciate it. And then I'll let you guys go, and then we'll take it from there.
Sounds great.
All right, guys. You bet. Thanks. You bet, guys. Bye-bye. All right, everybody. Well, again, thanks again. And great. Lots of chatter in the chat. So I really appreciate that. And then if you don't mind, remember to subscribe to the channel and give this video a thumbs up. And hopefully you got something out of it. And then I really appreciate it. And then we'll tune in next week because we'll have another show. Thanks again. Bye-bye.